Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 18th of February 2024. We're publishing our Gold and Silver Weekly Update for the weekend in the 16th of February. An interesting week, with gold and silver falling quite dramatically Tuesday into Wednesday, only to recover again on Thursday and Friday, with silver outperforming gold quite strongly. Why did this happen? Let's take a look. Firstly, just a quick reminder that we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who have not as yet joined that channel. Now, gold fell $11 last week, falling from 2024 to 2013, having hit a high of 2030 and a low of 1984. A fall of 0.55%. In our last update, we predicted that gold would trade between 1960 and 2060 range, which it did quite comfortably. Gold spread between high and low was $46. In sterling terms, gold finished the week down £6 at £1,599, and in euros it closed down €15 at €1,869. Silver rose 81 cents, rising from $22.61 to $23.42, having hit a high of $23.54 and a low of $21.95, a rise of 3.6%. Last weekend, we forecast silver would move between $21.35 and $23.35, and once again it did this comfortably within the range, save that on Friday it did close 7 cents above that range, but fell well within our outlier range of $24. In sterling terms, silver closed up 66 pence at £18.60, and in euros it closed at 21.76 euros. That's up €0.75 of €1. Silver spread between high and low was back to the normal sort of range of around $1.59. The gold to silver ratio fell 3.5 points, falling from 89.5 to 1 to 86 to 1. Bitcoin currently stands just shy of $51,800. That's up $4,684, resulting in a 2-week rise of $8,500, or almost 20%. US equities were marginally lower, mainly thanks to a fall on Friday. The Dow Jones closed at 38,627. That's down 44 points on the week. The S&P 500 was down 21 points for the week at 5,005. And the Nasdaq Composite was down 215 points on the week at 15,775. But European shares bucked the trend and were generally up, with the UK's FTSE 100 index up 139 points on the week at 7,711. Unfortunately, oils were higher. This isn't going to please the Fed that much as it tries to tackle inflation. Brent crude was up $1.28 at $83.47, and WTI crude was up $2.35 at $79.19. The dollar index stands at 104.27. That's up 0.16 points on the week. So the dollar is still continuing to rise, though perhaps it won't be long before that begins to run out of steam. Now, we stated last week to look out for Tuesday, where we have the CPI inflation data for January, and expectations were for a significant fall in the CPI rate from 3.4% to 2.9%, but that would only be achieved if the monthly figure came in at 0.2%. Core CPI was expected to fall year over year to 3.7 compared with 3.9, and again that would only happen if the January figures came in at 0.3%. Well, we did mention that if the CPI figures provided a strong variance from expectations in either direction, there would be an impact on the dollar, equities and precious metals. Well, the CPI and core CPI figures came out stronger than anticipated, or higher. CPI for January came in at 0.3%, meaning that the year-over-year figure, although it fell, it only fell to 3.1 as opposed to the 2.9 expected, and the core CPI figures came in at 0.4%, meaning that the year-over-year figure of 3.9 remained unchanged, and markets were expecting a fall to 3.7. The result was an immediate fall in precious metal prices and strengthening of the US dollar. However, on Thursday, retail sales came in much lower than anticipated, with the January figure showing a fall of 0.8%, compared with expectations of minus 0.3%. From Thursday, we noticed a recovery of major losses for precious metals running through to the close on Friday afternoon. Now, this coming week, there's not a huge amount of data, save that on Wednesday we have the Fed's January FOMC minutes being published, Thursday, flash services and manufacturing PMIs, and a host of governors and bank presidents giving their views on what is likely to happen to the economy in the coming months, and this will be closely monitored by analysts. So, apart from the minutes and commentary, not a significant amount of data to move markets. That said, the recovery of gold and silver towards the end of the week does suggest that there are buyers at key support levels. Gold's bottom is generally regarded at resting around $1,950, which is broadly where the 50-week EMA rests. Its peak is seen by analysts as resting between $2,065 and $2,075, and it's only when this range is broken can we then expect to see any approach towards all-time highs again. Silver's bottom or major support level is showing at around $21.88, and the consensus is that it's unlikely to rise much above $24.60 in the coming week. We were heartened to see the rise on Thursday and Friday for both gold and silver, and this could very well continue into the start of next week, with very little save perhaps geopolitical influences to knock it off track. Our forecast for gold, therefore, is a trading range between $1,975 and $2,065, with $1,950 and $2,075 as outliers. For silver, we may see more of a percentage spread, with normal trading occurring between $22.25 and $24.25, with $21.80 and $24.80 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign. As mentioned at the start of the video, please pop on over to Finances Do Matter and make sure you subscribe there. And all that remains is that we wish you a happy, enjoyable and safe weekend. And as always, a prosperous week ahead.